It's time now for our call of the day. And today we're talking about Credit Suisse's latest on shares of Facebook. The firm raising its price target to $305 a share. That's up from $258, keeping an outperform rating on the stock. And, you know, it's funny, Shauna, we were just chatting in the break a little bit about this note. And I think it was Dan Roberts who said, oh, another commentary on an embattled stock. And we're like, yeah, well, I mean, it's at a record high, basically, ahead of its earnings. And I think there seems to be uncertainty around where Facebook is headed. But all these headlines we've seen recently around big advertisers pulling back their ad spend has actually, I think in my view, and we've discussed it a few times on the show, kind of made more clear what Facebook's business model is, which is that marketplace kind of small B2B sort of advertiser that Credit Suisse really likes here.
Yeah, and Credit Suisse does call it exactly out. I mean, they do like their Facebook marketplace, the Facebook shops, the searches. They're saying that is really one of the catalysts here for Facebook going forward. And then, of course, they also say that they think that the street is a little bit too conservative, or at least underestimating the growth potential of some of their properties like Messenger and also WhatsApp. But Miles, going back to what you were saying just about the boycott and whether or not that's having any material impact, will it have any material impact? I mean, take a look at the stock. You mentioned the fact that it's at an all-time high. This is something we have been talking about now for the last 5, 6, 7 weeks. And we were talking about maybe we will see some sort of impact. Obviously, it's not a good PR position for Facebook to be in. And Mark Zuckerberg has been forced to be pretty vocal, or at least make comments about where they stand right now, what changes they are hoping to make here in the future. But whether or not it's actually a business problem here for Facebook, and Credit Suisse is making this argument as well, it's basically not. I mean, they have 8 million advertisers on their platform. So the fact that we do have big brands taking a stance, pausing some of their spending on their platform here, at least in the short term. Obviously, it's invoking a little bit of a PR mess, but financially speaking, this won't be a huge blow for the company. I think that's validated by where the stock is today ahead of those results. And I think we're going to get more comments here from analysts ahead of Facebook's earnings, kind of backing that up, because that's largely been the view. And the stock's performance has really, I guess, asserted the fact that that seems to be true, at least for now. So unless we get a massive, massive, massive wave of companies going off Facebook, including those small businesses, which can't afford to do it right now, then this little boycott, or not little boycott, I guess it's a big boycott here, is having a little impact, I should say, financially on the company.
And guys, you know, Shauna said, unless we get a massive wave, I mean, we have seen a pretty sizable wave of big name companies join this boycott, but it hasn't mattered much. And you know, whether it's fortunate or unfortunate, and some may shake their heads, but remember a couple weeks ago, we had a leaked Mark Zuckerberg memo sent to the whole company that I'm sure he knew would get out and didn't mind. And in it, he said, we believe that most of these companies will come back to the platform. And he's probably right. Most of the companies that have come out and said we're boycotting for a time, you know, it's a little bit of optics for them. They're getting in some good optics. Based on some reports from various research firms, Facebook has only lost like $200 or $250 million worth of ad money so far because of the boycott. Let's put that in perspective. This company has $17 billion in ad revenue in the first half of 2020. It's a drop in the bucket. I don't think they care yet. I mean, they care. I'm sure they care, but it is by no means a disaster. And by the way, look at the stock. The stock has gone up, regardless. And here's another upgrade we're discussing, regardless of this boycott. And just for one more example today, a little bit of a weird one, and it might prove to be an outlier, but the Wall Street Journal reporting that Disney has slashed its advertising on Facebook, and of course, Facebook-owned Instagram more recently. And that's after Disney was the #1 biggest advertiser on Facebook in the first half of the year. Now, that story was light on details, you know, for how long it's slashing its ad budget, by how much. But whether or not that's part of the boycott, it's another one that, you know, you might blink at first and say, wow, Disney, big name. Still probably doesn't matter. And one last thing I want to mention, here's the statement that Facebook sent us about that Wall Street Journal story on Disney. We invest billions of dollars each year to keep our community safe and continuously work with outside experts to review and update our policies. A non-statement, but I think Facebook thinks that it could just keep saying the same thing on this issue until it all goes away, and they're probably right.
I am not as laissez-faire, I guess, as Dan and Shauna, especially looking at this Credit Suisse note, because if you do look at the actual industries where ad spending has gone down, of course, it's not all created equally. Retail, of course, looking at dining QSRs, entertainment and media, all of those continued to spend steadily throughout this COVID period. But then we did see declines in auto, pharmaceuticals, consumer electronics, financial services, and CPG. Obviously, as we go forward, I'm sure we have seen some bounce back in sectors like retail, right? But if you look at the overall picture, even beyond this boycott, I do feel as though these budgets are getting slashed. Of course, when you look at the industries like, for example, a DTC company in the dining space or that sells a certain food product, they wouldn't survive without Facebook. No one would even hear about them without Instagram. So I understand that some business models are completely predicated upon the existence of their Instagram account and getting thousands of followers there and getting influencers to share things. But I do feel like structurally speaking, I cannot imagine it's going to be an abundant flow of money. And also just one other stat to point out, 70% of Facebook's ad revenue actually comes from small and medium-sized businesses. So we have put so much focus and attention on large enterprises like Disney, like Starbucks, but let's not forget that the bulk of it does come from small mom and pop shops.
Yeah, and I think it's always hard to quantify, but everyone knows that being on Facebook, being on Instagram, it sucks. It's a bad experience. No one likes it, and no one has fun there, even though everyone is there and people make lots of money on it. At some point, I think people will get tired of it.
Unpopular opinion. I'd be curious Melody's thinking on this, but I don't agree yet on Instagram. I think Facebook is awful. You're right. And by the way, not just awful, increasingly awful. Like it's even worse now than the last time I looked at it maybe 3 months ago. But I was trying to change a setting yesterday. It's impossible. They don't want you to be able to figure out how to change something. Just awful. Instagram, not awful yet, I think. And also the ads on Instagram have sort of been clever. Most of them, they're not too awful yet. I'm sure it'll get there.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.